Hey, what's up, YouTube? Welcome back to my page, Money Making Juggernaut, the #1 educator in surplus funds and asset recovery. Today, I am going to break down the difference between mortgage foreclosures and tax deed surpluses. Okay, this is a question that a lot of you guys have, and to be honest, it's not that complex. So hopefully after today's video, you guys know exactly what entails on both ends, because they are two separate things. Okay, when it comes to asset recovery, we have many ways that we can help people out. We have tax deed overages, we have tax lien overages, we have mortgage foreclosures, we have unclaimed state funds, we have unclaimed bankruptcies, and they're all different. Okay, they're pretty similar when it comes to the aspect of, us locating funds and locating the individual and reuniting them, helping them file the claim, but the process is a little bit different. All right, so we're gonna go ahead and dive into that. Okay, before we do that, make sure you guys go ahead and hit the like and hit the subscribe button. I appreciate everybody. I'm almost at 15,000 subscribers now, and I appreciate it. And once again, guys, this is the #1 page when it comes to education in this business, because there's nobody else out there that is fully transparent and breaking everything down. All right, guys, so the first thing that I want to discuss when it comes to mortgage foreclosures, all right, the way that we get leads is going to be a little bit different than the way that we get leads for tax deeds and tax overages. All right, typically for tax deed foreclosures, we'll probably get a list from the county. All right, they'll have a list available, whether that's on the county site or you can email or call them for that list. With mortgage foreclosures, typically there aren't lists available. All right, the county doesn't really release a list that shows all the properties that have mortgage foreclosure surpluses. Now, of course, there are some counties that do allow this. All right, they do present that, but typically they don't. All right, so you're gonna have to create a list yourself. All right, and the way that you do that is by looking at the auction results. Okay, so in order to determine a mortgage foreclosure surplus, we have to get the correct formula. Okay, so typically it's going to be the opening bid, which is going to be the final judgment, or sometimes referred to as the writ amount, WRIT. All right, so in mortgage foreclosures, typically that final judgment is going to be the amount that they owed on the mortgage for their home. Okay, they owe that to the bank, plus it's going to be interest, any sort of cost, any things like that. But also sometimes be aware that it can be the HOA that performs the foreclosure on the property. So that opening bid amount could possibly be the HOA amount that they have not paid, and now the property is going to be foreclosed. So we're going to have to do some research to really figure out what that is. And the way that we can determine that is by going into the county's docket. Okay, so when we look at an auction calendar for mortgage foreclosure, there's going to be a case number. All right, with this case number, you're going to be able to take that number, go over to the county site and search up that case number, and you'll be able to see all the documents pertaining to that specific case. All right, you're going to be looking for a document known as the final judgment. All right, this final judgment is going to break everything down. You're going to be able to determine if this was an HOA foreclosure or if it was a bank foreclosure. Now keep in mind, if it is an HOA foreclosure and they still owed money on their mortgage to the bank, then that bank does have interest in that surplus. It doesn't mean that they're going to automatically get it. It just means that they have interest. Just like in tax deeds, when a property is foreclosed and there's a surplus, there's other creditors that are actually entitled to those surplus funds as well. All right, so we have to keep that in mind. All right, so we're going to have that opening bid, which is typically the final judgment amount. Now when we're looking at like the auction results or an auction calendar, it should lay out and tell you, okay, if this is the opening bid or the final judgment. So make sure you determine that. There's also going to be an assessed value. Okay, the surplus formula is going to be the final sell amount minus the final judgment or the opening bid. That will get you the surplus. Okay, we're not really worried about the assessed value. We'll worry about that when we're doing a pre-foreclosure strategy. But for mortgage foreclosures, all right, and I've had some students reach out to me and they messed up on this. We have to make sure that it's sold to a third-party bidder. Okay, that's standard when it comes to surplus funds. It has to sell to that investor at the auction. Okay, it's not going to be a surplus if it was sold to the plaintiff. It's not going to be a surplus if it was sold back to the bank or the county. Okay, only third-party bidders. All right, this is how we get the surplus. Okay, after we determine that a surplus is available, we should be going into the docket. Okay, so the docket is basically where the documents are for that county in regards to that case. We can see sometimes they have a final sale breakdown where it shows the excess proceeds amount, or it just shows that the property sold for a higher amount, and you can determine that. All right. What we're going to do is we're going to make sure that we verify who the previous owner was. All right. Now, typically, this is the defendant. All right. In mortgage foreclosures, we have a defendant and we have a plaintiff. The plaintiff is typically the bank or the HOA that is performing the foreclosure due to non-payment, and the defendant is the person who's going to be entitled to surplus. All right. If there is any. Okay. So that defendant is who we're looking for. Now, keep in mind, guys, defendants, sometimes they're going to be listing multiple people. All right, so this is why we need to go back in the docket, start looking for any sort of documentations, any deed documents or anything like that, so we can verify who the previous owner was. You can also go over to the property appraiser site and verify that as well. Once we locate that individual, we want to send them some sort of proof. All right, that proof, I always say, guys, we got to let our proof do the talking. So we can send over the auction calendar, the auction results showing that the property sold for a higher amount, and then also the state statute showing that they're actually entitled to these funds. All right. So with mortgage foreclosures, another key thing to keep in mind is they actually have a quick turnaround time when it comes to the payout. All right. So when it comes to tax overages, we know that typically they have, like Florida, for example, they have a 120-day rule. All right. So after the property's foreclosed, once they send the notice of surplus funds letter, there's a 120-day period in which lien holders can file a claim, and the county is not even reviewing claims. You can submit a claim, but they're not even reviewing claims. All right. So in this time duration, that's about 4 months we're waiting. With mortgage foreclosures, we can get that process started and completed pretty fast. All right. And the reason is, we are going to file what's known as a motion. Okay, this is going to be a motion to release those surplus funds that is due to the previous owner or their heirs or whoever you're helping out. All right, this motion typically can be granted within a few weeks, so you can get paid out a lot faster in mortgage foreclosures. Another thing to keep in mind, guys, with mortgage foreclosures, it is going to occur more frequently. If you take a look at any auction calendar and compare the mortgage foreclosures to the tax deed foreclosures, you will see that it does happen on a more frequent basis when it comes to mortgage foreclosures, because typically more people don't pay their mortgage opposed to paying their tax. All right. So key takeaways from this video: with mortgage foreclosures, it is going to occur more frequently. We can get paid out faster. It is just a little bit more complex in terms of doing research, checking to see if there's other creditors, who's actually entitled, things like that. Another thing, it is recommended to use an attorney for mortgage foreclosures, because now this is an actual case. All right. With tax deed overages, typically there's just a claim form. You fill it out, the finance department approves it, releases the check. If there's no type of issues, if there is an issue, it'll go to interpleader, then you might need an attorney. But typically with mortgage foreclosures, this is something that's going to be court ordered, judge approved. So you will most likely want to use an attorney. All right. Finding an attorney is not difficult, guys. I definitely explain that in the course. I give you some good websites that you can use. So you're going to want to use an attorney. All right. With mortgage foreclosures, all right, another thing to keep in mind, there's a difference between the payouts with mortgage foreclosures and tax deed overages. With tax deed overages, all right, sometimes there might not be any type of cap on how much you can charge. But for mortgage foreclosures, there's a prime example, Florida. Tax overages, there's no limit. Mortgage foreclosure, there's a 12% limit. So you have to make sure that you can determine what's the difference, how much the state can allow, and then if they're referring to unclaimed state funds, mortgage foreclosures, or tax deed overages. All right, guys. So if you guys are looking to work mortgage foreclosures, in my course, I cover that, guys. All right. I do talk about tax deed overages a lot because it is a simple and easy method, because they provide the list online and it's typically an easy claim form. But mortgage foreclosures is not difficult, guys. It is covered in my course. And actually today on my Zoom call with my students that we do in the Facebook group twice a week with an attorney, we are going to go over Indiana mortgage foreclosures. All right, guys. So if you get the course, you're going to be able to be eligible for the Facebook community. And there we do 2 calls a week. We do workshops. Today's workshop, we happen to discuss Indiana mortgage foreclosures. All right. So the course is going to teach you step-by-step instructions. You're going to get all the forms that's needed to have a successful claim. You're going to figure out how to find an attorney. You're going to literally know step-by-step exactly how to operate this business. But in the Facebook group, that's where you get the community. That's where you get the extra guidance. That's where you get the extra help. So Hopefully you guys learned a lot from this video, and if you guys liked it, make sure you go ahead and hit that like, hit that thumbs up, and don't forget to subscribe. Thank you.